All right, welcome into Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. Thank you very much for tuning us in. If that's what you're doing, if you've been with us all day, well, I'm going to probably try to get these numbers to you and make sure that you've got some information that's going to want to make you stay. Let's take a look at what we've got going on in corn. Let's bring up that big corn board behind my big head. See what that looks like here for us. Well, it's we got May is sharply unchanged. That's why I stuttered there for a second. 630 1/4 is last there. We do have a lower board as you go out the deferreds. Now May's higher by 1/4, but May's at 630 1/2. We've got July up or down 1/4 at 622 even, and new crop D's down 3 cents. Sorry, 3 cents. We lost that 570 line. We're at 566 3/4. All right, well, that's no bueno. Let's see if we've got any better news in the beans, and we do. Look at this. All right, here we go. May's up 16 1/4 cents to 14.95 1/4, trying to get back up to that 15 handle. We've got July up 16 1/2 cents to 14.86 even. Let's go out and see what the new crop's got in store for us, see what they've gone up. We do lose a little bit out there, but not as much. We're up 13 1/2 cents, right? That's a solid 1% gain. 13.60 3/4 is last there, and that's November of 23. That's the new crop you'll be hedging into. How about wheat? In Chicago, the Chicago wheat, you ask. Well, here it is. We've got May 5 1/2 cents better at 7.11. Not bad. This is a little bit better than yesterday. July's up 4 3/4 cents to 7.18 1/2. So we'll take it, right? Yesterday was not a lot of fun sitting in this chair. Hard red wheat. Let's check out Kansas City. That's up 4 1/4 cents in the May contract. 8.17 evens last there. That's pretty much in the middle of the day's range. We got a 4-cent rally right behind it in July. 8.10 1/2 is last there. Spring wheat in Minneapolis. Let's go up there and see what they've got. This one's a little chillier, as they say, right? May's off 2 3/4 cents to 8.64 even. That's 3 cents off the lows. July's off 2 1/2 cents to 8.60 even as well. So let's take a look now at the cotton board. These prices are brought to us by Bar Chart, by the way. Cotton, let's go to, we'll go to May, I guess, 89 points higher, 84.92, but we've got Dees up 73 points to 84.56. And if you notice, there's just a pretty much straight line. There's not a lot of spread action there between the May out to the Dees. Okay, let's bring in our next guest analyst. It's Riley Schwieger, CHS. Riley, thanks for being on the show. What do you got for us, man? That's a much better day to be on today than yesterday. I'll put it that way for you.
Yeah, it's a little bit of a mixed bag today, but we are edging a little bit higher. Got some early influence overnight from some positive Chinese economic data. We did see both manufacturing and non-manufacturing PMI show expansion at higher than expected levels. We did see that manufacturing sector expand by its quickest level in over a decade. So that's really important for energy specifically. We need that demand growth domestically to kind of swallow up some of these elevated exports that we've been seeing out of them. The purchasing has been great, but we do expect those fuel exports to decline as their economy kind of continues to crawl out of this COVID-0 protocol. We did see the EIA report to release inventories today. Headline numbers, we saw 1.1 million barrel build for crude, 800,000 barrel drop for gas, and 179,000 barrel build for diesel. Crude exports, record levels, 5.6 million barrels per day, 59.5 million barrels up year to date for crude. Diesel and gas demand were both strong, or did see an increase, but both remain below year-ago levels. So see if we find a little bit more influence from some of the economic reports tomorrow into Friday, but overall a green day for energy.
Yeah, I mean, we've got basically crude oil unchanged here. It was a little lower earlier, but what are your thoughts on that going into the future here? I mean, it's 76, 77 bucks a barrel. Do we see 80? I mean, are you in that camp, or are you still worried about demand destruction with the economies and recessionary attacks?
I'm definitely worried about the demand destruction, especially short term. But I do really like seeing that Chinese expansion. We're expecting them to account for a really big chunk of global oil demand. If we can get that at the back end of the year here, I think we'll be able to get out of this range and push a little higher into the 80s.
All right, great stuff. Really appreciate you coming on. I know you're busy. Riley Schwieger, he comes to us from Inver Grove Heights. That's CHS. We're going to go away. We're going to take a quick break. We're going to come back and talk more livestock with me after this.